We start with the banking crisis. It is spilling out of America. Last week, 2 US banks collapsed. It set off a chain reaction. Now another bank is on the brink. We are talking about global investment bank Credit Suisse. Yesterday, its share price tanked. It dropped by more than 30%. And this is a record low. The stock was worth less than 2 Swiss francs. That's a little over $2. And this fall is bigger than the Silicon Valley Bank because Credit Suisse is a much bigger bank. It is among the top 30 lenders in the world. And if this bank fails, the world economy will feel the impact much more than it already is feeling. So why is Credit Suisse in trouble? It started with the collapse of the Silicon Valley Bank in the US. The episode alerted regulators. They began asking questions from banks, and this is happening across the world. The global banking system is under scrutiny. Credit Suisse was also under the lens, and it could not pass that test. Earlier this week, Credit Suisse made an admission. US regulators had posed some questions to this bank. They were inquiring about the bank's books, specifically the cash flow statements for 2019 and 2020. Now, what is a cash flow statement? It is a record of the money that comes in and goes out of the business. American regulators wanted to know about the cash flow of Credit Suisse, and the bank admitted that there were some lapses. Material weaknesses, that's the term they used. There were material weaknesses. And this was about how the bank reported its finances. There were lapses, and Credit Suisse released a statement. In fact, let me quote from that statement. As of December 31st, 2022, the group's internal control over financial reporting was not effective. Now, let me say this here. There is no indication that Credit Suisse reported incorrect numbers. This is more about the bank's internal processes, the checks and balances. Credit Suisse says they're not good enough. But this admission proved to be costly. You see, in the world of finance, even the hint of something being wrong can spark fears.
Well, I think with Credit Suisse, you've had a perfect storm. It started with SVB, Silicon Valley Bank, over the weekend, and then the Signature Bank failure. And Credit Suisse has experienced some of the same challenges that those banks have in terms of deposit withdrawals.
So that's how it all began. Credit Suisse was supposed to release its annual report. It was delayed, and yesterday it became worse. A major investor gave a virtual thumbs down to the bank. This is the Saudi National Bank. It is the biggest shareholder in Credit Suisse. Last year, it picked up a 9.8% stake. There was talk that the Saudis could invest more. But yesterday, the chairman of the Saudi National Bank dismissed the idea. He was asked about Credit Suisse and whether the Saudi bank will buy more shares. And this was his response. I'm quoting again. The answer is absolutely not, for many reasons. I will cite the simplest reason, which is regulatory and statutory. So basically, he's blaming regulation and more. And that statement triggered the nosedive. Shares tanked. At one point, it was trading below $2. Later in the day, the stock price recovered, but the troubles for Credit Suisse are far from over. There is a credibility crisis. The bank is trying hard to prove that it's not in trouble. It announced some radical decisions today. It has borrowed $54 billion from the Swiss Central Bank. What is this money for? To shore up the finances of Credit Suisse. And they do not really need this money, but they're playing safe. In case there are more withdrawals, they'll have enough cash to take care of it. The funding from the central bank is going to be useful. Also, Credit Suisse is repaying its debt in advance. It has plans to offer a buyback. What is a buyback? It is a form of borrowing where bonds are sold with an agreement to repurchase them at a later date. That is a buyback. The bank could settle loans worth $3 billion. The idea is to boost sentiment and to convey the message that all is well. And the Swiss Central Bank is helping in this. It says Credit Suisse is sound. Let me quote from their statement. The statement about Credit Suisse, it says, it meets the capital and liquidity requirements imposed on systemically important banks. So if everything is sound, why is the bank making such aggressive moves? Why does it face the crisis of credibility? That's because of its record. Over the years, this bank has faced a host of scandals. In Bulgaria, it allowed drug dealers to launder money. In Mozambique, the bank faced a corruption case. Then there was a spying scandal. The bank snooped on its top executives. Last year, there was a massive data leak. And all these scandals led to losses. Credit Suisse has lost several clients. The bank was trying to regain lost confidence, but now people are betting on it to fail. This week, the bank's credit default swaps hit a record. Now, what is a credit default swap? It is an insurance against failing debt. But it can be used to make a bet too, a bet that the company might fail.
Credit Suisse has been a story that's been playing out for a number of years over time, but it's still generally a story of bad, corporate management, and investors are now focused on it, and people are thinking about counterparty risk as well as risky assets. And Credit Suisse is now kind of top of mind as people focus on banks within their portfolio and what they have exposure to.
The global banking sector is in panic mode. Investors are worried. The sentiment has changed. People now feel that banks are a risky investment. And they have good reasons to be afraid.